All right, guys, so we are at the top of our recording series. And I'm trying to think back. I guess it's been about 10, 11 weeks now since we were at this spot. I've got 10 core workshops, and what I like to do is kind of just do like a round robin. We'll go through all 10, and then I usually will add like a little something new. I'll try to find something. I'll pull something out of current events, current trading events, and try to add some additional gold nuggets, as I like to call them, for all of our members. But we do have to remember that there's a lot of newbies here. So I'm trying to kill two birds with one stone, so to speak, taking care of all the members and taking care of all of the new eyeballs and ears that we have in this workshop. So this is the basic training for quant traders, and I'll have you for an hour tonight. And members, thanks for hanging out. I do appreciate it, especially those of you on the East Coast or further. This is recorded, and we will do our best to get a recording out to you within about 24 hours after we finish up the show tonight. So with that, let's get into it. There's a little risk disclosure that you guys need to do a quick speed read on, or you can just take your time to add up the number of words that are inside of that risk disclosure, which I think add up to 53, which I'll say risk. So in case you didn't know it, there is risk involved in trading. And if I'm the first one that's telling you that, well, then that would be very interesting. All right, so let's get into it. I'm going to give you guys a little backstory on me. I think it's important for you guys to meet and greet the coach, the trader. I'm a lot like you guys, believe it or not. I'm a trader. I have a 9 to 5. I have a family. I wear a mask when I go out, except for today. I actually forgot it. Actually kept me from being able to go to a couple of stores because I knew people would freak out. But yeah, here we are, whole new world. So what hasn't changed is me. I'm still here, same guy. Been trading since '98. I've been in the business as a broker, advisor, administrator of trading systems, hedge fund manager, both onshore and offshore. Some good stories to be told for the offshore stuff. Back in the Obama era, I just think about pre-Obama coming into office and how there was so much chaos in the air and how much opportunity there was. And here we are in a whole different presidential era. And yeah, it's there's more chaos now than there ever was before. And I'm not blaming Trump. I'm just saying it's an interesting world out there. Anyways, yeah, so that's my background. I've executed thousands of trades with mechanical trading systems. I got my Series 3 back in like 1998. And long story short, 2008 happened, and I decided to get out of the brokerage business and kind of do my own thing. Found Joe. Actually, Joe and I were doing we're doing some trading together long before that, but decided that the trade coach route was going to be my route, and I would continue to trade for myself. So the one common theme is that I've been trading for myself this whole time. Seen a lot of ugliness. I've seen some of the biggest drops that we've had. Obviously, this last one, which will be interesting. I've got a couple slides I'm going to share with you guys here in a minute, comparing the 2008 crash and the COVID crash. But I'm thinking about 9/11, the stories I have on that, and some of the biggest rallies I've been a part of in the thick of it with my own personal trades and with people that I've managed money for. I've studied a lot of things: Keltner, Bollinger, Elliott, stochastic, Fibonacci. You could probably make a basketball team out of those 5. Sounds like a Olympic basketball team right there. And when it comes to quantitative trading, my studying and my coach, my mentor, was Joe. So took a lot of what he had spent years before me doing down on the Wall Street, on the streets of Wall Street, on the ground floor. And Joe and I have similar backgrounds in terms of what we've done in the industry with regards to the financial markets. So, and to this day, I've added things that I knew before I knew Joe to those things that Joe taught me. And what you guys see live in the trading room is really kind of a culmination of the best, if that makes sense. And I try to make it as easy as I can. As you can see, that last goal is to provide simple and logistical trading decisions for you guys. If I can't make it simple, if I can't interpret what you're looking at on a screen, if I can't put the logic together and help you understand why this market is doing this, then I'm not doing my job. And quite frankly, it's not fun. And if it's not fun, you're not making money. And if you're not making money, why the hell would you be trading? There's a lot of other things you could be doing early in the morning or late in the evening. So with that, now you know about me, and this is where I'm going to turn it around on you guys, and I'm going to get a chance to get to know you guys. So this is going to be called crowd participation. And what I'm going to do is I'm going to pop up a poll, and I appreciate you guys filling out some of the questions upon your registration. So the first poll question I have, how would you best describe your trading over the past week? Over the past week. So it's a multiple option here. Full throttle, you've been killing it. You've been hitting your max goal, maybe even going beyond. Maybe you've been bumping into the walls, you're not so happy. Maybe you've been crashing and burning, really pissed off. Probably a reason why you're here tonight. Maybe you've just been on the sidelines in the paddock, so to speak, trying to figure out how to put a new engine in this car, in this body of yours, in this put a new brain, a new trading brain into the cranium, and trying to find a new path. So for all the newbies, probably a lot of you guys are that last one, but for the members, obviously I want you guys to participate in this too. This kind of just tells me who's in the room and how you've been faring as of late. Again, not the last 90 days, but just the last week. So let's go ahead and close that up, and I'll share with you guys the results. So it looks like it's a tie between bumping into the walls and on the sides. Man, and, a lot of people are on the sideline right now, right? Whether you've been furloughed, laid off, had a chunk of your retirement that got taken away, then again, if you didn't touch it, it's right back to where it was, close to it. But there's a lot of confusion in the marketplace, and I'll go into that in just a little bit. One more poll question that I would like to launch here. Again, just giving me a chance to know you guys, and here comes the second one. If you could increase your trading results by 25% over the next week of trading, would you make the commitment? So again, if you could actually increase your results by 25% over the course, today's Wednesday, so between now and next Wednesday, would you actually make a commitment? If you had to change doing things the way that you've been doing and just make a couple of tweaks and follow a set of logic and follow a system, if you will. So that's a real simple one. It's a yes, it's a no, or it's an undecided. And it's not a trick question, guys. Just hopefully what it's doing is it's getting you guys to kind of just like stop and think. Well, you know what? Yeah, I do have some bad habits. I really should try something different. If I'm going to consider doing something different, make the commitment. That's what I'm looking for. So let's close that up and share the results there. And holy cow, 100% of you are saying yes. Good. You guys are the ones that I want to take to Vegas and teach you how to play a game of craps. And boy, wouldn't that be a good time. All right. Did I mention that I'm loading up on caffeine as we speak? So I'm going to be going 100 miles an hour. I'll try to go as slow as I can for you guys. All right. So now that I know who's in the crowd, let's get on with the show. So I mentioned earlier I was going to talk about where we were 10 weeks ago. Again, we got a 10-week course. I got 10 workshops that I go through. We make little minor tweaks here and there, but for the core, tonight is the kickoff. There's so much information in this first one. I really should make it a 2-hour workshop, but instead I just kind of compress it down to 1 hour, leave a lot of things out there hanging, and make you guys hungry to come back for more. So guys, last time I did this, if we turn the clock back 10 weeks, here it is. Today is, what is it, May 27th? So turn the clocks back 11 weeks, because I took last week off. And that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That was March 11th. March 11th. Do you guys remember what happened around March 11th? When I was putting this workshop together, we were just kind of in the thick of it. And I put the slide up. I created this very slide. I haven't changed it. So what you guys are looking at is this was where we were with the sell-off. Now these represent days. I believe these are daily bars I have up here. And February 17th, I believe, is the beginning of the sell-off. And I just remember saying, oh my gosh, look at this. Now, those of you guys that know my performance, my best month for the year has been February. February was fantastic. I call it the COVID month. Massive opportunities and massive volatility, massive volume. It all adds up to being a great time to trade. And I was asking everybody then, hey, what's going to happen, 4 weeks in? What's going to happen? How many more of these are we going to have? Well, the interesting thing is, let me go to the next slide. I was comparing the 2008 crash. This was 2008. Take a look at the bottom. Down there, September, October. And it lasted for 6 months, guys. So in comparison, the COVID crash, I mean, guys, 6 months, it's more like, what, 6 weeks of a drop? Because what I'm going to do now is I'm going to just exit out of this. This is a PowerPoint that I'm in, some slides I created. And I'm going to pop up this chart here. This is the S&P. Now, this is the S&P on a daily. And pay no attention right now to the purple and the blue. Those are just channels. I don't want you guys to get confused or wonder what those are. Nothing in particular right now. But this is just a daily to give you an idea. March 17th was right. Let me just find it here. April, May, March. Here we go. That's the 5th, 6th, 7th, 10th, 11th, 12th, 13th, 14th, 15th. Right there. Right there was the 17th. So again, these are dailies. Okay. 1, 2, 3, 4, 5, 6, 7. This is back on February 21st, down to the bottom. And a lot of people were thinking, oh my God, this is going to be like 2008. I think there's still a lot of people that are shocked that we've had as much of a run as we've had. And if you take a look at this market that has just been on a tear, right? I mean, think about how many people thought, oh my gosh, my whole retirement gone, vanished. Well, if you didn't do anything, just kind of like in 2008, it all kind of came back. Now, there's a lot of people questioning what's going to happen next. Like, is it gonna have that double dip? Are we gonna go back up and beat, get up to where we were back in February? I don't know, guys. And this workshop is not to tell you any predictions. What I am here to tell you is that the trading that I teach, and the trading that I preach, and the trading that I actually do, put your money where your mouth is basically taking positions long and short. I mean, take a look at this morning. This morning, I was in a Dow trade, and I think I had, or the S&P actually. Here's the S&P. I was in an S&P trade, and the S&P for the most part, it's on a 30. I'll put it on a 5. Was in a downward spiral. It had rallied overnight, and then when the stock market opened up at 9:30, it was headed straight down, and it went down into what we refer to as bear zone 2. And you're going to see some purple bars. There it is. That's the drop right there. All the way down to this red level that we refer to as critical support. And that was at 11 o'clock this morning. So from 9:30, dropping into bear zone 1, bear zone 2, testing the critical support. And I was short. Now, how many people wake up as a stock trader? Like if you just trade stocks, you trade options. How many people wake up and go, yep, I'm going to sell Boeing, I'm going to sell Tesla, I'm going to sell some Microsoft, and I'm just going to sit back and watch this trade sell off. And then in about an hour, maybe 5 minutes, 30 minutes, an hour, I'm going to buy it back. Or I'm going to go take that short on Microsoft, I'm going to go buy Amazon. I mean, you guys don't do that as a day trader when you're trading stocks. The reason why people trade the entire index, the S&P, the Dow, the NASDAQ, the entire index with futures is because that is what you can do, and you can make or lose money in seconds, in minutes, in hours. But you got to have a methodology, and imagine you not only making money in one direction. Imagine you being able to trade a basket of markets, try to apply some logic that I'll be teaching you, how to narrow down your basket. And I want you guys to focus right now on what is inside of these boxes: S&P, crude oil, natural gas, gold, bonds. We had a bond trade today. First time I've had a bond trade in months. Dollar index, currencies. And, you'll see here on the first line item, what is risk on? What is risk off? What is mixed? What does the color mean? I promise you, you will have all this make a lot of sense. The light bulbs will come on. It should look a little foreign when you first look at it. Members, you're looking at it right now and going, I know exactly what this is. You didn't know the first time you came in. It might have taken you a couple workshops. It might have taken you 5 days in the TradeLAB. But the reality is now it clicks. So it's kind of like learning a new language. Same concept, right? So what's the most important thing that you're going to learn is that you need to know what the sentiment is. And you need to know what the logic is. Now, I say logic, guys, I'm talking about sentiment. I'm talking about what's the trend. I'm talking about, can you tell me what's leading and lagging? Can you tell me what are the lagging markets? In fact, that helped me on, I'm taking a short NASDAQ and a long S&P today. Being able to identify those two things. Identifying the location. Let's talk about location. How important is the location? Now watch what I'm going to do here. I'm just going to pull up a normal plain Jane chart, and I'll do the, it doesn't even matter what I do. Let's do gold. And this will be a 5-minute chart. And I always refer to this as a naked chart of gold. This is what gold looks like naked, no clothes. Now, how do you look at that chart, and how do you determine where you're going to get in and when you're going to get out? Now, of course, everybody can do it. You could tell me what you would have done today, but what would you do at this very minute? What would you do in an hour from now? What would you do in the London session tonight? What would you do tomorrow morning? How do you answer that question? By just looking at a chart. Now, the kind, nice people at NinjaTrader have done something for you, because after all, you're leasing their platform or you've purchased it, a lifetime membership, which, by the way, I highly recommend if you want to save a couple bucks. They've given you all of these indicators. Check it out. It's kind of like going to the grocery store and looking at the pasta aisle. You got some Fibonacci. You've got some pitchforks in there. You got some ellipses. You've got some trend channels. You got some shapes. Kind of like going back to kindergarten. Ellipse, rectangle, triangle, arcs. I mean, the reality is there's lots of stuff that are free, but what do you do with them? And then maybe you go out and you buy somebody's whiz-bang indicator that's black boxed, and it works for the S&P. And then you go out and buy another indicator, and it works only for gold. And then you go out and you actually subscribe to a newsletter only for crude oil. And what you've done is you've put yourself into categories. You put yourself into a very tough position to only be, you're not very flexible. You're basically just cramping your style. Now, what if I told you that we could take any one of these markets, commodities, currencies, cryptos, stocks, ETFs, okay? Any one of those market classes. As long as there's volume, as long as there's volatility, we could dress up the chart and make it look something like this. Now, you're going to see me show this a lot in the TradeLAB. Very important that you understand the map. And by the way, guys, if you have questions as we go, I'll pull off to the side, I promise, and I'll answer up those questions. So feel free to throw them up. Use the bottom of the toolbar and send your question in to me, por favor. So it's very important, critical. If there's anything you walk away with tonight, is you understanding what the zones are and what the levels are. Now, I mentioned earlier when I was looking at the S&P, I said, hey, we hit critical support. That's the red level down there. Well, there's a red level at the very top, and that's called critical resistance. So guys, here's the score. Every 24 hours, these levels are going to reset. Every 24 hours, they reset. They are dynamic. They'll stay static for 24 hours, but they are dynamic, that they will change based on an algorithm that Joe has written and is coded into NinjaTrader. And the levels work the same for all of the markets. What's great about this is you could look at any market when you're talking to a buddy, a spouse, a relative, anybody, and you're sharing with them, hey, that market looks bullish right now, and here's why. You can tell them, well, because it broke this, it came up and dipped off of this bull level. And they'd be saying, well, how do you know that? Well, it's because I have some RiosQuant. I have some quantitative levels that can help me see bull zones. Bull zone 1, bull zone 2, bull zone 3. There's 3 of them. And you know that when you're up here in bull zone 3, yeah, you should kind of like stop trading. Unless you're going to get like some kind of a retracement or a scalp up there. No sense in looking for a new trend. No sense in looking for a big breakout up there. Where you ultimately want to buy things is when you're close to the bull level. And where you ultimately want to sell things is when you're close to the bear level. So imagine you being able to have these levels and put any market that you want up to see where that market is trading. That's what we do with these levels. And we can use the zones to help us get in, and we can use the zones and the levels to help us scale out of our trades. One more I'll talk about here, an NTZ, a neutral trade zone. Anytime we're in between the greens or in between the yellows, that would be a neutral trade zone. That's where the market's going up and it's testing, perhaps taking a pause, perhaps getting choppy, and either going forward or giving up. You can see a perfect example here. And this, by the way, is a JPEG I've been sharing for, God, the last 3 months. I update it probably like once a quarter. Doesn't matter, but just letting you guys know that this is a great example of the test inside the neutral trade zone. And something you'll learn across the series here is that we have this other thing called time, prime time. And this is an example of prime time for the London session. In the London session, that prime time ends at 5. And look what happened at 5. Market went up, tapped the level, and went sideways. Stock market opens up at 9:30, and the sell-off begins. Stock market closes at 1600 hours, 4 o'clock. And look at the run-up in the last hour. Again, this is an example that I grabbed from way back in the day, but it doesn't matter. I can do this all day long when I go and I look at markets with you guys and do workshops like this. So I'll stop there for a second, see if there's any questions, because there usually is one or two that pops in that I'll be more than happy to help you guys out with. Okay, I think we're good. All right, we're going to keep rolling. All right, so you got the levels, you got the zones. That's very important because that brings me back to our PowerPoint here. And let's get back into the previous slide and talk about what's happening now, right? So here's 2008 crash. Look at that big run up. Look at the dip down there. Again, that was a 6-month stay down there. Then the gigantic run up. You guys know the whole story. And then look at the drop. And then I just shared with you guys what the S&P has been doing over the course of the last 8 weeks. Pretty incredible comeback. Will it stay up here? Don't know. But here's what I do know, guys. We're going to have a lot more volatility throughout this year, which is fantastic. It's great. As a day trader, you live for the conditions, the market conditions we're having right now. Do not tell me that there's somebody that you know right now that has 10, 50, or $500,000 that they are just excited as hell to go put in the stock market right now. Do not tell me. And if you do tell me, I'm going to call you a liar. No one's excited. Everyone's freaking right now. They're freaking out. Do I put the money in now? I mean, everybody says it's bound to take a dip. Good old Warren. Warren took his money out of Delta. I mean, there's too many people that are concerned about it, talking about it. The question is when, not if, when. And guys, here's my answer. I don't care. I'm a day trader. I go in and I am teaching you guys how to go in with a goal. We have one of these workshops on money management. Those of you that have had a trade coach session with me where we've built your trade plan, you know exactly what your daily goal is for how much you're allowed to lose and how much you're trying to win, and let your winners run. You're being taught how to do that here. Money management's built in. You're not expected to make 20 to 22 wins a month. That is not going to happen. My best month of trading, I don't make money every day. I don't. I try to make money every week. I'm going to have some bumps throughout the road in the week, and you have to be smart about how to cut off the losers and let those winners run. Yeah, tell me you haven't heard that before. So, number one, you got to find your zone. Do you know how to identify a bull bear zone? Well, if you have the levels, and based on what I just shared with you, the answer is yes. You now know what I'm talking about when I say, hey guys, what zone are we in? Bull or bear? Sometimes I'll come in the TradeLAB and open up the room and say, guys, what's our sentiment? Just kind of filling out the crowd. Do you know what the sentiment is? We give you an indicator that actually tells you what the sentiment is. That's the DMS, the Dynamic Market Sentiment Indicator. There's a way to figure it out on your own if you don't have it, and you should always know how to do it. And if you don't, you want to be lazy. Nothing wrong with being lazy and looking at a color and looking at a bar that's at the bottom of your screen to be able to know what the sentiment is. Let me just showcase what that is while I'm talking about it. See this down here at the bottom? Not that one. I'll pull up the screen right over one of these screens. Oh, I'm on the wrong workspace. I forgot that I switched over. Let's go back over to this workspace and take a look at this guy right here. Now, these are the bonds, but what I want you to look at is the bottom. That's the DMS indicator, RQDMS, Dynamic Market Sentiment. When we see red, the sentiment is risk off. When we see green, the sentiment is risk on. When we see yellow, we have a mixed sentiment. And when we have blue, it is conflict. Why should you care? Why is that a big deal? Because it's part of the logic. Sentiment is a huge part. Sentiment is this row up here, number one, risk on, risk off. This tells me, hey man, sentiment has changed from conflict to risk off. I need to start trying to find short opportunities in the S&P Dow, NASDAQ, and dollar, and longs in the bonds and the notes. Turns out today in the TradeLAB, I went long the bonds because we had risk off. I was looking for shorts in the stocks and longs in the interest rate. It just so happened, building a box, and that's another workshop in its own, I was able to find a precision entry based off of time, based off of zones, based off the sentiment. Keep it real simple. Based off of the stuff that you see here, sentiment, trend, what's leading and lagging. What's the RQ Tech tell me? RQ Tech is helping me see consistencies in the trend. That is built into NinjaTrader's Market Analyzer. Imagine having a tool where you could look at all the markets and we could color coordinate it for you. Click on the net change and see the top leading markets. I have my market data connected. This is a live market data screen you're looking at. And the top leading markets right now would be the YM, the Dow, the MYM is the micro Dow, the S&P ES, and BTC Bitcoin. Out of the basket that I have, those are your leaders. Now I want you to look at this column. 1 hour, 3 hour, 8 hour time frames. So when I click on net change again, I'm looking for consistency in color. Bitcoin's not so consistent right now. It's not the top dog. The Dow is. If I flip this around from net change, Now I'm going to see the biggest laggards. Biggest laggards, crude oil, natural gas. Gas is completely red across the board. That would be a great trade to go look for a short if we were inside of a prime time, which we actually are for the APAC session. I'm actually going to take you over right now to the natural gas July contract. This is the live market right now. And well, what do we have here? We have a natural gas market that is just getting ready to enter bear zone 2. Again, I'm going to pop this up so you can see it. And I'll shrink this down a little bit. There's your map telling you where the zones are. Bear zone 2. That's 1, that's 2, and this is 3 down here. Now, what you haven't heard me talk about yet are those purple horizontal lines. Those purple horizontal lines and also blue lines are channels. That helps me find precision entries when I'm going to be taking trades that are trend followers. So if I'm looking to get short the natural gas, I'm going to want to place my stop underneath one of these 2 channels. I really like it when these channels come together, like they did right here, for about 5, 10, 15, 25 minutes. Right now they're separated. And right now one of those channels is actually living inside of a neutral trade zone. The market's actually coming down here and dipping into the zone as we speak. What I want to wait for, kind of getting ahead, but I think it's important because we got a live one here, is I want to wait for the candle to turn purple. Purple is weakness, yellow is neutrality, and blue is strength. We don't have any blue ones up here. Have to go way back. The APAC session, this is a prime time. APAC session, you will find this to be a good time for trading gas from 8 to 11. And what am I doing right now? I'm actually building a box for you guys right now. Probably don't even realize it, but I just started building the sides of the box. Now I'm going to build the top of the box, and now I'm going to put in the bottom of the box using the levels. I just put a box together. Now I'm going to scroll this back to the right, and I would keep my stop down here, and I would just sit back and wait. These are 5-minute candles. I would wait for a candle to start turning purple. If and when it does, I bring my stop up underneath and get ready to get hit so I could be short that market. Only if I have a lot of logic on my side. What is the sentiment? Is this a trend following trade? Yes. Is this a lagging market? Yes, the second biggest to crude oil. Does the RQ text show me a lot of red on the 1, 3, and 8 hour time frames? Yes, I just shared it with you. If you missed it, here it is again. There it is, natural gas, second biggest lagging market, red across the board. What's the location? Is it ideal? It's not ideal. It's the second zone. It's a second bear, but still it's a zone that you can enter and entertain a trade. You're just going to risk less. And then, of course, do you have volume and do you have an imminent report about to pop? And I can tell you right now that those 2 are weak. So just kind of adding up the logic here, it would look like this. Sentiment is right. It's a trend following trade. It's a laggard. Architect is ideal. Location's not perfect. Volume's not perfect, but I have a 4 I've given myself, which adds up to what I refer to as a medium probability trade. I would keep the sell stop down away and wait and bring it up after I see the right color and prepare to strike. So that's kind of like a fast forward for what I usually do every morning inside of the TradeLAB that I refer to as a box trade. We have a whole workshop on that. That'd be ideal to kind of give you guys that opportunity. Maybe I'll pop this up later and we'll see if we have a chance to put that trade on live inside of this workshop. Wouldn't that be pretty cool? All right, going back to the logic. Do you know when to buy in the bull and when to sell in the bear? Well, with the levels on top of your charts using NinjaTrader, the answer is yes. I've talked about that enough today. Do you know how to identify high and low probability? Well, guess what? It's exactly what I just did with you guys. Identify it by adding up the logic here. So you're going to see as a quant trader, half of what you have is technical analysis. These are indicators that we're providing for you that are quantitative in their design, right? The levels. We have accelerators that actually show us if there is acceleration into the candle or the bar or coming out. Is it neutral? Is there imminent change? We have the analyzer that I've been sharing with you to help identify what the leaders and the laggards are, showing me the different time frames over the last 1 hour, the last 3 hours, the last 8 hours. That 8 hour is really important, especially if you're trading in the US session, because you need to know what the trend was in the London session. This 8 hour is important if you're trading the London session, and you need to know what the trend was overall in the Asian session. Very, very important. Obviously, the 3 hours is important, and the 1 hour is important as well. Okay, moving on. Let's get to the next screen. So again, this is kind of like a before and after. I like this shot here because this really kind of shows you where a lot of you guys, before you found us, where you were. Maybe with like one simple moving average, maybe you had a channel, maybe you had some regression, maybe you had some SNR support resistance, maybe you had some kind of oscillator. You had one thing, maybe you got 10 things on the screen on the left. But how confident are you being able to know if you're buying in the bull or if you're buying in a bear? Think about it. How sound and confident are you with your money management? Why do you always buy and sell two of something? Are you using leverage? If so, how much and enough? And if not, why not? If you have a $5,000 account, hell, if you have a $2,000 account, why are you not taking trades? Well, gosh, EP, it's a $300 risk. No. Trade micros. You trade 1 or 2 micros. Let one of those micros run. And if it gets into the next zone and above, it turns out to be not a $20 winner, but perhaps a $200 winner. We will teach you how to do that. And if you're trading with $20,000, are you putting on more risk? 2.5%, 3% of risk per trade? When are you backing out? When are you backing off? How long do you trade? Here's one that a lot of people fall into the pitfall of: trading too damn long. Tell me the last time you went to go sit in front of a screen and trade stocks all day long. I pity the fool that does that. Unless you work for a firm, unless you work for a hedge fund, you are not allowed to do that. Not on my watch. You are wasting your time. I am not going to teach anybody here how to be a professional trader to go work for a hedge fund and trade all day long. There are pockets. And guess what? The hedge fund guys, they know those pockets. And a lot of the systems today, guys, are machines. There's no people. There's just people watching the machines and watching things happen in the market that create some high volume moves that trigger algorithms to put trades on. And often these machines are high frequency trading systems. They're just going in to do a clip here and a clip there and doing thousands of clips to make thousands of dollars. But that's not you. You need to know how to go in and stack those things up in your favor. I was sharing with you earlier. Get in and get out, know your goal, and walk away. And if you get licked, come back in a little bit later and look for the opportunity. But if the opportunity is not there, then you're not there either. Get it? All right. Back to our main presentation. Talked about that one. Let's go over to this guy here. Let's talk about basket, world markets. What's really great is you can go tell anybody that you're going to talk to after this presentation tonight that you learned a methodology that applies to every damn market you see on the screen. Guys, this is what fuels me. Man, if I had to rely only on trading the S&P all day, or if my system only worked on the Dow, only worked for gold, man, I don't get it. Because some days those markets just don't have a heartbeat. They're choppy, they're flat, they're dead. There's nothing happening. But there's other things happening in other markets, and your system doesn't work with those. Why? Because the guy that wrote the system, the guy that wrote the code, never back tested and tried it on any other markets. What if I told you everything that I do here could work on coffee, cocoa, hogs, soybeans? Now, do I trade those other markets? No, but I certainly could. And this is a good group of baskets. These are world markets that have the heartbeat of the planet. When we have leaders, we have governments, and we have fundamental things happening that create a trigger, a domino. When something happens with Boeing, as we saw 10 weeks ago, and as we saw again today, if we see something happen with Amazon, we see something happen with GE, we see something happen with Microsoft, we see something happen with a new pharmaceutical that's going to be popping, talking about how they have the vaccination that's going to be readily available in 12 weeks. I mean, those things trigger these markets on the screen to do things for the most part, not the grains so much. But you better believe something happens to the S&P that's going to affect crude oil, that's going to affect gold, that's going to affect copper. And if something happens to crude oil, that could affect another natural resource, natural gas. And if something happens to the euro, major domino. The correlation is fantastic. And that's why you want to be able to use a set of logic that can work with all of these markets. And when the right trade is in play and you have enough things stacked up and you calculate the risk and you can participate, knowing what you are at risk of losing or winning, you're on your way. All right, so here's the 3 trading styles that you're going to see as you come into the TradeLAB tomorrow. And sometimes I actually apply all 3. Today I actually did. Today I had a losing trade, first trade out of the gate in the NASDAQ. I tried to buy the NASDAQ as it was bouncing off of critical support, third zone, bouncing off the level. And it just did not retrace strong enough, and I got stopped out. I then did, I think we had 2, maybe 3 turbo scalp trades, some scalping. Those trades can last anywhere from 1 minute to, I'd say, 15 or 20 minutes on average. By the way, the retracement, the RQOBOS, overbought, oversold, that retracement trade I had today, we usually have anywhere between 1 to 3 that I'll showcase in any TradeLAB, which lasts for about 90 minutes. So the stronger the markets are moving, the more opportunities there are for us to look for some retracements. So if you miss a trade that breaks down like the S&P did today, and you miss the opportunity to get in, well, just wait for a bounce, look for an OBOS, and buy the retracement. And then what I just did for you guys with that natural gas, that was an example of box trading. I like to do a lot of box trading now, especially as my first trade out of the gate in the TradeLAB, for a couple reasons. One, I like to slow things down. This is the easiest method that I have to share with you for you to follow. It's a great place to start. I don't care what size account you have, but it's a great place to start for you just to kind of, okay, it's a 5-minute bar, 5-minute candle. I can do this. Let me set the box. Let me look for the box. Let me look at the logic. Let me apply it. And every morning now, you guys will see me do that. And obviously, I'm trying to find the smartest trade, the highest probability trade for you guys to participate. Most importantly, though, I want you to learn. So today, I actually had all 3 strategies kick out. Some days, I'll only have 1. And some days, we'll have nothing. Some days, the market's just not offering anything across the board. There's no reports. Market's slow. It might be a Friday. Might be a Friday before a holiday. I'm thinking of like last week. So you never know what you're going to get. But the one common thread amongst all 3 of these styles is I am using and applying the trade zones, using and applying the levels to help me identify the qualifying setup. So with that, I'm going to take just a pause here and look at the messages coming through, make sure I'm not losing anybody, and see if there's anything in specific here I need to address. Okay, I got a question coming in about 20 minutes ago. Thanks for being patient, Arby. Are the neutral zones always the same, whether bull 1, bull 2, or bull 2, bull 3, or bear 1, bear 2, or bear 2? Yeah, are they always the same? I think I know what you're asking, but let me just make sure. So Arby's asking if the neutral trade zones are always the same. Actually, the best way to showcase this is actually go into a live chart. And I'm actually going to show you what happens at midnight. Every stinking day. Watch this. Okay. So every day at midnight Eastern time, the levels adjust. And so you can see the bull bear yesterday were down here. They adjusted up at midnight. The resistance levels, resistance 1 and 1B, were here. They moved up here. The support levels from yesterday, support 1, support 1B, those guys, they moved up as well. So the neutral trade zone that was here yesterday, down between bear zone 1 and bear zone 2, is here today. So to answer your question, RB, are the neutral trade zones the same in terms of the location? Yes. Bear zone 1, bear zone 2, bear zone 3. But are they the same? Are they in the same place? No, they adjust every 24 hours. And on that note, very important to know, everybody, whether you're from Belize or Dubai or Jersey or Florida or Denver or Arizona, wherever you are, we're all going to make our clocks when we trade. We're all going to make our clocks work off of New York time. Set them to Eastern time, New York City time. That's what we agreed to, so we all have the same levels in a 24-hour series, and we're all on the same page. So when you come in, I have a lot of folks outside of the United States that join me in the room. And if you don't change your clock, your levels are not going to look the same as mine. That's the only way we're able to have our levels around the planet look the same in a 24-hour period. We have to make a confirmation as to what we're going to judge our starting point to be. It's kind of like GMT. When does time start, right? It's kind of like New Year's Eve. Everybody has to agree that Australia is going to be the first ones, or actually, isn't it like Guam? Who's going to be the first ones to actually celebrate New Year's Eve, right? And then I think actually Guam's the last one, if I think about that right. But my point is we all have to be on Eastern time. So very, very important to do that when you get set up, guys. Arby, are you good on that question? Did I knock that down for you? Hopefully so. If not, okay, yeah, good. All right. Greg, can I get the logic worksheet? Yes, Greg, you're a member. You should have that. Greg, send me an email. Send me an email. I think you have my email. I'll be happy to send that over to you, bud. Gus is telling me he's got some pretty nasty weather. Yeah, Joe was saying he had some pretty nasty weather. Any of you guys down there in the south, good luck with that. I hear it's pretty nasty, lots of rain. All right, we're good. Let's keep rolling here. Let's go back to the presentation. I got about 10 more minutes here. Let's keep rolling. Next thing to talk about is this guy here, your trading technology. Simple goal, make smart logical choices to help increase the odds toward success. Guys, sometimes you just look at this stuff on paper and you're like, yeah, I've heard that before. But I mean, make smart decisions. Why are you doing what you do? Why are you getting long? Well, because the magic dot just turned green, and you're supposed to get long when it turns green. And the magic dot turned red. You're supposed to get short. No, like, are you just looking at one thing? I'm always talking out loud with you guys. I'm always talking about, hey, what is the S&P doing? Those of you guys in the TradeLAB today, you saw me take my limit order down on the NASDAQ. I cheated it. I brought it down rather than to wait for it to get hit, because I saw the S&P starting to make a U-turn on its run. And so rather than to miss out on an opportunity, I started locking in profit and took some of my contracts off. And that turned out to be a good thing. Why? Because I was looking at something else rather than just looking at my one market. I was looking at the set of logic. So you got to make some logical choices. Tools for the trade. I talked about some of those tools earlier. The levels, we've talked about that enough now. Zones, the RQ Tech, helping me identify what's leading and lagging. The DMS, helping me identify dynamic market sentiment. What is the sentiment? That's like step one. If you don't know the sentiment, guys, so many people are lost because they just don't know. They take some university class online course and they're just kind of giving them basics on like analysis, like chart analysis. There's so much more to it than that. But yet you don't have to overwhelm somebody and teach somebody, 15 different indicators and 15 different chart patterns. We don't do any of that. We teach you our indicators and we share with you what they're based off of. The latest one is the RQ Obos, overbought, oversold. We're trying to show you when markets are overbought and oversold. Let me actually show you what that indicator looks like. So when you're in the lab tomorrow, you know what I'm talking about. When it populates, here is the Dow, and what I'm looking for is some Obos signals. Let's see if I can find one. Yep, right down there at the bottom. You see the yellow dots, and you see the big green dot? Well, the yellow dot is saying, hey, this market is oversold. Does that mean get long? No. Just means that if you're short, you might want to start tightening up your stop and locking something in because it turns out that it's starting to be oversold and it might start turning around. The green one is saying, hello, knock, knock. Yeah, retracement possibly coming. Guys, here's the logic. If you have a market that's going down in bear zone 1 and it's getting close to a level of support, logically, it might, it's going to do three things. It's going to bounce, it's going to drive through, or it's going to be stuck in a neutral trade zone. One of those three things. Well, we're giving you an indicator here that's saying potential retracement. And if you want to take it, well, after this bar closes, put a buy stop in just above the next one. And yes, you would have been hit. And you're taking it for a ride right up to the SMA. That's a simple moving average. That would have been a beautiful trade today on the Dow. And this is a micro Dow, by the way. And then some. Look where this thing went. It went all the way back into the neutral and then the bull zone. And we all know how the day ended up. And if you don't, well, now you do. Let me squeeze this together for you. By the way, that's a turbo scalp trade we did in the room today. Yeah, the Dow had a lot of firepower. Went all the way back up. Tested the first level of resistance. Went through resistance. Oh, you see the red dots up there? That's the Obos. That's saying, hello, retracement possibly coming. That's exactly what took place. There's your retracement. Back down to the SMA and then some. Now, don't get retracement confused with reversal. This doesn't mean reverse out and just take it all the way back down. This means small retracement down to a target. The target in this case would be smart to be looking at a level or an SMA, one of those two. That's what I always like to use. And if you have like a 2 lot, let one run. Why not? If you have a 3 lot, take 2 off and let that third one run. If you got a 5 lot, take 4 off and let one run. Because sometimes, yeah, it will retrace a lot more. And look what this thing did right at the last hour of trading today. Look at this thing. There's some more retracements. No retracements came. This is at the very close. That's why. Market ran through the close. Look at all those retracements, and it just never looked back. Market on a tear today. That's your Dow. Finishing up above 25,000, 25,600. Finished at trading as we speak at 25. Where is it as we speak? Holy cow. Oh my gosh, guys. In real time. This is it in real time. 25,716. Is that nuts or what? By the way, guys, let me just give you a warning right now. The bigger the run, the longer the marathon, the steeper, the bigger the spike, the next day, the levels are going to be wider apart and you're not going to know it by the naked eye, but the levels will be farther apart, which means the risk will be larger tomorrow. Very important for you to identify that and always calculate the risk before you get into any trade. I'll tell you guys right now that if I was trading 6 and 7 lots in the Dow micros, I'll probably be doing 2 or 3 tomorrow because the risk will be that much larger. How much more of a run are we going to have You don't typically see 2 back-to-back marathon days like this. So here we are in the middle of the week, and a lot of gas in the tank on this market. Crazy, right? All right, next slide. So guys, this is the car that I step into every day. This is what it looks like when I get in. And again, the first time you step into a car and you see all these widgets on the dashboard, think of a pilot in a plane, an F1 driver in the cockpit of a race car. It's a little intimidating. The hell, just think of the new cars. You get into these new cars, there's no clutch. What's a clutch? Teaching my kids how to drive right now. There's no clutch. Everything's electronic. There's buttons for overdrive. There's buttons for turbo, for sport mode. There's paddles. There's all sorts of widgets. And, once you actually get comfortable knowing what they all do, you kind of feel pretty good about it. And you realize the power and the control and the logic of what they do, what they mean. You start feeling in control. A lot of people don't have a dashboard or a steering wheel that looks like this. They have like just one thing and they're just waiting for the light to turn red or green. That's not going to get it done, guys. The list of logic for all the trading, I have swing trading up there. I'm going to take that out. That's from the last go around. This is for all the trading. All the trading. I'll change that to box trading because this is all really core for the box trading. The location, the sentiment, we've talked about that tonight. What's leading and lagging, what's a trend, what time is it? Is this a good time to be trading or a slow time to be trading? Are we in a prime time? Do we have volume? Right now in the Asian session, not a lot of volume right now. It is a prime time for the Asian session to trade, but markets like the yen, the Aussie. Think about the Australian market. It's up in prime right now. Japanese market, it's up in prime right now. That can affect the euro. Natural gas and copper are some of the other markets that do tend to trend well in the Asian prime time. Imminent reports. Do we have anything coming out? I've got bookmarks for some of my reports that I'll pull down inside of the TradeLAB and show you guys. Like tomorrow, for example, infamous Thursday. What do we have? Yeah, you guys don't want to hear it. Jobless claims come out tomorrow. Natural gas report comes out tomorrow. Typically on Thursdays, because of the holiday, that might get pushed to Friday. And then headlines. What's going on out there? I mean, the biggest headline right now is the confidence in vaccines and the stock market just going straight up. How long will that last? And then L2L, look to the left. As I get ready to trade tomorrow morning, I'll be looking at the European session. How did we do last night? Give yourself 24 hours, look to the left and see where the market tested. What zones did it test? Run a clean race, guys. That's my mantra. Run a clean race. Treat your trading like you would if you were going to get behind one of these guys. You can't just hop in. You got to have some mental preparation. Not just anybody can jump into one of these cars and whip around a track at 232 miles an hour in the turns. Can't. A lot of guys will end up doing this. A lot of guys say, oh, I can do this. All I have to do is hit sell market. Yeah, that's true. But what if you sell market right when something breaks, right when a report comes out, right when something's breaking through a resistance and jamming into the next zone, running after the next resistance, and you sell another one thinking, oh, well, I'll just do some dollar cash averaging. I'll just sell another one. Well, this is what you're going to look like. Run a clean race and have some logic behind it. Levels and logic basics. Oops, went too fast. Sorry about that. Levels and logic. There we go, back here. Identify the bull and bear zones. Very critical. How do the levels work? These are things that you're going to learn as you go into more of these workshops with me. Learn the basic features. You'll see this in the TradeLAB when we do live trading. And of course, I'll be teaching strategies in the room and in future workshops just like this one. Do you know how to identify a bull and bear zone? Make sure that you do. That's one of the core critical things you need to be doing after, I'd say, 2 or 3 TradeLAB sessions. You'll start to pick up on it. Do you know when to buy in the bull and when to sell in the bear? Do you know how to identify high and low probabilities? We talked about that earlier. Your next step is to get yourself a demo account going. So if you don't have NinjaTrader, get a simulated trading account up and running. The data is free. Now, I will say this. They being NinjaTrader, they stopped free demos from like the beginning of March through middle of April. I don't know if they've kicked it back up again. I'm hoping that they have. I've got a guy at NinjaTrader that I'm more than happy to refer you to. You can email me directly if you need his contact information, and I'll put my email inside of the box down here and share that with you guys so you can reach out to me if you need his contact info. But you need to sim trade for a while. Get familiar with the indicators. Of course, we want to offer you a package of indicators. If you like what you see in the trade room, if you like what you've heard here tonight, then we'd love to have you into the TradeLAB tomorrow morning. We kick the doors open right at 9 o'clock. Joe will do a top-down analysis, do some forecasting, talk about activity from the previous night, and talk about some setups. And then I'll start trading with you guys live right as the stock market opens up and take you till 11. Sometimes we'll stop earlier. Sometimes we don't need to go to 11 if we've knocked down the profit target. There's nothing else to talk about, but there definitely has been lots of things to talk about here as of late. And then we do these weekly workshops on Wednesdays, and we definitely invite you to get to be a part of that. Limited offer. So here's what I'm offering up for anybody that makes a purchase on our RQ 2020 package by the end of this week. I'm going to throw in a trade coach session. That's a 1-hour consultation with me. We're going to build a trade plan for you. It's a great way to get started. It's got a $350 value that will be included with any purchases that are made between now and the end of this week. Here is a screenshot on the packages that we have to offer. And the RQ 2020 is over to the far right. Everything I have talked about here with you guys tonight, the levels, the RQ Tech, the DMS, the dynamic market sentiment, accelerators. We didn't have time to talk about that tonight. We'll definitely get into that in future workshops. You'll have access to future workshops. Very important for you guys that are just setting up in a 5-day trial. This will be the last workshop if you don't make a purchase tonight, just an FYI. RQ channels are a part of that package, the retracement signals, and then, of course, one of the strategies I use just about every day in the TradeLAB called Turbo Scalp. So you can see the value of the Turbo Scalp and the RQ Obos just by themselves. And this, by the way, is a one-time fee. And then the TradeLAB, to have access to trade along with me, that is a monthly fee. So those are your options. And again, as you can see up at the top, the creed, we want people that are serious about their trading, serious about making some changes. I popped up earlier on the poll, those of you that would make a commitment if you could actually increase your trading by 25% in a week. Think about that for a second. If you just lost $1,000 last week, would these indicators and this methodology help you be $250 profitable starting off next week? Rather than going down into a ditch, can we pull you back up and get you on the right pace? The answer is yes, but you have to be dedicated and you have to be willing to make that commitment. And you'll be very happy and pleased as we set daily goals, weekly goals, monthly goals for you. But this is the logic, guys. This is what we use. And contact information to reach out to us to learn more about it. You can reach out to my buddy Tim. Tim's email is tim@riosquant.com. He can help you out with any membership packages. And then if you have any questions with regards to the technology, the indicators, getting set up in NinjaTrader, you can send us an email directly at support@riosquant.com. So with that, guys, I will stop the recording. I will stay back and answer up any questions for any of you guys that still have some. And I do want to say thank you for everybody that came in tonight, especially for those folks that stayed late on the East Coast. I'll keep a chart up here in the background. In fact, why don't we just go pop up that natural gas again and see if we're close to a trade? Actually, we are. I told you guys I would look for a trade while we were going, and look at this, just started to turn purple. So there's the box trade I had drawn up earlier for natural gas. Color of the candle is turned purple. Now, I wasn't here when it did, but right now, that would be an ideal spot to place a sell stop for natural gas. I'd place a 1 lot with my target down here at the bottom. And if and when that gets filled, I'll be placing a buy stop right back up here above the opposite yellow levels. There's a trade that we'll be looking for tonight. After all, we do have 2 more hours of prime time for this trade. And let's not forget that natural gas, according to the RQ Tech, is nothing but red. So there you have it, guys. Again, I'm going to kill the recording. Say thank you to everybody that came in. Thank you for being a part of it. Great timing. We just got short natural gas. Have a fantastic evening. Please be in the TradeLAB tomorrow. Be a participant. And everything you heard me talk about, I'll actually bring to life, just like I kind of just did right there on the natural gas for you all tomorrow. Take care, guys, and stay safe.